Okay, peeps, welcome back. So today we're going to be going over our buy, sells, and dividends. So with that being said, let's get it. All right. So what you guys can see in front of you guys, in front of us, is basically our futures trading here. So I'm going to go over this day by day, and then we'll go over the week. So if I scroll back here to the 19th, you guys can see we have a profitable day. On the 20th, an unprofitable day. The kicker about the unprofitable days over the profitable ones is, as a day trader, I just have to learn to walk away at some point and not just keep racking up losses, because if the trading's already going bad, it's best just to, um, and this is as if I was speaking for myself, it's basically best just to walk away and say, okay, had a bad day, need to walk away before it gets worse and just cut my losses, and then that's that. Because as you guys can see, on the next day, came back with a big banger here, made a 42.50 total. And then on Thursday, of course, had another one of those not so great, not so profitable days, down 2,100. And then on Friday, up again on the Jackson Hole Symposium. So I did trade that and made quite a bit of money here, as you guys can see, 3,400. And it was actually, there was some not so great trades, but overall there was money that was made. That's all that matters. So you can see on the week here, $4,835. All right, so now let's get into the actual content. Again, we don't really count the whole day trading thing as part of the actual income that we make every single week, every single month. We're just kind of keeping these two separate right now. So M1 Finance, 1 cent from PSEC. We haven't really been doing much with this portfolio. Again, we're kind of in a transitioning phase here. We will add more to this portfolio eventually. We just don't know exactly when that's going to be. We're just going to simply maintain it for now. So before I go into anything else further, the things I want to point out here is for the dividends that we received from Robinhood this week was $36.81 from TSLP, $29.66 from XDTE, and $47.59 from QDTE. As you guys know, the XDTE, QDTE, those are weekly paying dividend options based ETFs. So the dividend positions that we bought this week were TSLP, GPIC, GPIX, AIPI, and SPYT. We also bought some TMF and some NVIDIA, which we'll get into in a little bit later. We opened up a large trade on NVIDIA this morning, but because of a couple different reasons, we actually decided to close it before the end of the trading session. Talk about that a little bit later. And also the crypto that we bought this week basically is just Filecoin at this point. So we did also sell NVIDIA, SoFi, and SQY, which we'll talk about a little bit later. So in terms of the Grayscale Trust on Fidelity, not really much going on there. We haven't bought or sold anything. Again, we're working on creating more capital to be able to buy more of these at what we consider to be the ideal prices. Generally speaking, the prices that we would be looking to buy at are the prices that we show you guys on the content that we make for you. So we may not buy exactly at the prices that we show you guys, but it theoretically should be pretty close to it. So yeah, not much has changed here, but we are still bullish on crypto. We still have multiple crypto positions. So you can see the Jackson Hole Symposium was very, very bullish for the overall portfolio here. Very bullish day. Of course, we already talked about this. You guys if you saw our video on Jackson Hole, you'd know what I'm talking about here. But yeah, there were some real rippers in crypto today. So as you guys can see, MSTY was up a massive 4.6% here. Coney up 4.4%. Mara was just on a trailblaze, 11.3% today. CLSK 7.8%. Of course, CLSK has a long, long ways to go to getting back above break even, and even YBIT was up 3%. So I'm actually I'm going to show you guys the positions that we have on Robinhood first before I go into the native crypto one. But I also want to show you Webull here. So you guys can see here based on the dividend tab, not really much going on here. I mean, we only have one position in here, and that's OARC, so nothing's really changing. We actually did discover this cool little feature. I'll have to show you to you guys here in a minute. Let me actually I'll start out like this. I'll just show you guys the NVIDIA piece first. So there is actually a feature to put in a stop loss here. I did not realize this before because we weren't really using the swing trading on here in the traditional sense. But the reason why we picked Webull is because their technical platform is a little bit better, in my opinion, than Robinhood when it comes to like actual trading, like swing trades. But Robinhood does apparently have a stop loss order. They even have a trailing stop order, um, stop limit order, all those things. So if we had a swing trade and let's say we took a swing trade on an entry signal like NVIDIA or something like that, we said, okay, it's going to go up 10%, right? And as soon as it goes up 10%, we're going to go ahead and throw a stop on at break even. So that way, if we get stopped out of the trade, we lose nothing. Okay. That's why it's called break even. And then let's say it goes up to 20%, then let's say we can then move our stop to, let's say, below whatever the recent swing low is. We could actually do that from here, just place the stop order on here, and then pretty much just use TradingView as the way to kind of see where the technicals are and then line our stop up on Robinhood with that accordingly. So the other thing I wanted to show you guys, and we've already talked about this on Jackson Hole, but I did want to show you guys that crypto was overall very bullish. Okay, Bitcoin's back up to 64,000. Ethereum's gone up a lot as well, and a lot of the Grayscale trusts and also the native crypto has gone up substantially, as you guys can see. All right, so let's talk about NVIDIA. So we bought a massive position this morning, as you guys can see, $8,000, 62.18 shares. Got in and then got out pretty much on the same day for roughly about the same price. Took a small loss. So again, that's not a big deal. It was roughly about a $10 loss. There's a few reasons for that. Number one, because number one, there's some shenanigans going on at work. So, anytime that we feel like there is going to be an issue that we have to deal with that could potentially affect the finances, we readjust accordingly. Okay, it's a lot of people call it rebalancing. We call it readjusting. So there's that. Jackson Hole did just happen, and that's very bullish news. Usually, if something bad happens, it happens over the weekend when investors can't get out of their positions. We didn't want to get stuck in a position like that. And we also, we just didn't really feel like it was the right time to get into NVIDIA. So we were having second thoughts about it, decided to get out, and I'm going to show you guys why right here. Although I do still think NVIDIA will go to all-time highs. And you can see it broke past this trend line here on the weekly time frame. I just think that NVIDIA has pretty much already had its run, and we're kind of, what I mean to say is it could run further, but I just think that we probably, if we were going to take such a large position, we probably should have done so like right back here somewhere, maybe even at the break of this downtrend line and just held it all the way up. I'm pretty confident NVIDIA earnings is going to come out good, but if for whatever reason it doesn't, the upside here is actually quite small before hitting resistance. So we figured if we were going to do that on something like another stock, maybe we would pick something like Tesla instead. As you guys can see, Tesla would have a lot more upside, even though earnings is not necessarily right around the corner. The Fed is going to cut rates, which is bullish for Tesla because they've even said that the interest rates are affecting their ability to do business, so to speak. That's not their exact words, but that's kind of how I interpret it. So that's the NVIDIA position. We got in and out of that. So now I'm going to go ahead and go over the actual dividend payments here. So scroll down real quick until I find it. Where are you? TSLP, so 72 shares as of right now. So you can see here $36.81 on TSLP just recently. Going all the way down to the bottom here, XDTE. So the great thing about XDTE is it actually has recovered almost all of the losses since that crazy weird flash crash we saw. So that's great. So $29.66. Again, that's just for this week. That does not include for the entire month. And then, of course, QDTE. We want to have both QDTE and XDTE at 100 shares each. So we're slowly trying to get to that. As the same also goes for both FEPI and AIPI. So QDTE hasn't quite recovered everything yet, but it's getting pretty close. $47.59 here. So the total for those comes out to $114.07. So it did take some losses this week. Again, this is the Nvidia loss right here, the $10.86, and the 181.05 was from Squee. That was just kind of a fumble on our part. We didn't think that the price was going to change from the aftermarket close hours to the pre-market and the open hours to the downsides. So seems like a little bit of shenanigans going on there from maybe a market maker or something. I'm not entirely sure, but yeah, unfortunately we got sold out at a slight loss there. So it sucks. It happens. We're not worried about it. We're still massively positive. So minus 191.91 there. All right, so let's go over the buys. So TSLP, we'll start with this one. So you can see 2 shares here on the 19th, 4 shares here on the 20th, and then the dividend payout came along. So we did buy GPIC and GPIX. Again, we only bought 1 share as of right now because we just wanted to get some skin in the game. As of right now, we do intend to buy more in the future, but there's some other positions we want to load up on first. We kind of just wanted to get this going, so to speak. So we bought 1 share here on the 21st. And then for GPIX, which is the S&P 500 version, we also bought just 1 share on the 21st. You can see the buying power we have right now is substantial. So we can load more money into these anytime we want to. We're just choosing to kind of be a little conservative at this point. So you can see what's great about these funds is that they do actually, when they dump with the market, but when they recover, they also recover very quickly with the markets. So you can see based on this that GPIX is actually almost back at all-time highs, which is fantastic. It shows me that this could potentially be a good long-term position to hold because it does generally go up over time with the markets and also pays a nice yield. So going down to AIPI. So the good thing about the squeeze position, the bad thing that sucked is we took a loss, but the good thing is we use that money to then buy more AIPI on the dip. So you can see the average cost here is under 53 now, just down 4%, very small amount. And we have over 100 shares, roughly about equivalent of FEPI. And once again, we're doing the dividend capture strategy here where we basically buy the shares in advance of whatever the upcoming X date is. So let's look at the calendar here. Okay, so first trading day was the 19th. So we got 0.79 shares here on the 19th and then 1.18 shares on the 21st. And then this was the squeeze sell buy on AIPI, 37.42 shares on the 21st, 1.76 on the 22nd. And again, that dividend payment is coming up soon next week, I believe, sometime next week. I don't know. We'll get to it when it comes around. So that's AIPI, TSLP, GPIC, and GPIX. Now let's go over TMF. Again, TMF is not really a dividend payout play. It's also not really a swing trade play or a growth stock play. Pretty much all this is just a pure play on the Fed. Okay. So we expect when the Fed cuts rates, as they continue to cut their rates, the price of TMF will go up. Okay. We've showed you this over time and we expect it to happen. So currently only have 1.79 shares. Again, it's not really a lot, but we're kind of just slowly easing into this as the Fed's getting to their first rate cut. So you guys can see here 0.17 shares on the 19th, roughly about 1.7 shares on, or 0.17 shares on the 20th, 0.16 shares on the 21st, 0.17 shares on the 22nd, 0.1 shares again also today. So now I'm going to go over SPYT. So the total share count we have here is 111 shares. Again, we're not really expecting a whole lot of price appreciation on this one, but the price does remain relatively stable, which is great for the NAV, so to speak. So yeah, it's only slightly below our price, so we're not too worried about that. But you guys can see that the last payment we got here was $35.35, and we recently just bought 4.01 shares today. And then we already showed you the NVIDIA play. So the positions we sold out of was NVIDIA. We showed you that. I'll show you guys now the SQUE play. So we got out of SQUE. It doesn't mean we're not going to get back into it. It's just, once again, we kind of want to condense our portfolios a little bit. And a lot of the positions, as you guys know, that we're buying are diversified, like AIPI, FEPI, QDTE, and XDTE. AIPI and FEPI pretty much covers the largest companies in the tech sector, so that's diversified in the tech sector. And then QDTE, XDTE has diversity among the entire markets, the respective markets that they're being traded on. So, and then of course YMAX, YMAG, those have basically all of whatever yield max ETFs that are within those. So Square, you guys can see that we sold out here. The total amount that we got for this was 2016.08 for 1863 a share. And then SoFi, so we got out of SoFi. Kind of the plan behind getting out of SoFi and PLTR was it's not that we're not necessarily bullish on the stocks. We just wanted to scale up the options portfolio. So we wanted to move the money out of there and get it into something like NVIDIA or MicroStrategy or Tesla or something a little bit larger that pays more premiums. So SoFi here, yeah, you guys can see that. So we had a contract here, and then, right. So we sold and then we bought back, and it cost a little bit of money to buy back. But again, we're not really counting that because we got paid plenty of premiums that offset the cost to buy back. And we did end up selling SoFi for a profit anyways. So actually I can do the math right here on that. I didn't even realize that this was actually something we were going to have to do. So I believe the average price that we had was $6.91 per share on SoFi. So it's basically 51 cents a share in profit times 700.09 shares here. So the total profit, the total profit here basically matched the amount of money that it cost us to buy back the shares. So if I actually do the minus 357, which basically would leave us with a 4-cent profit, which again is not much, but that does not include the premiums that we got paid here. So it was actually $120.04 profit. But since we're already doing this video, we're just not going to count that in this. So that's SoFi as of right now. Okay, so I'm going to go over the options premiums with you guys. So we have NVDL. Cash secured put 819. The closing date on that was 823. Again, the market did skyrocket. So as you guys know, a cash secured put, generally when the price of the underlying goes down, that's when you run the risk of assignment and the contract gains in value. So it becomes more expensive to close. So in this case, if we want to close early for a profit, we want the position, because it's a cash secured put, we want the position to go up, the underlying to go up. So that way we can close early and keep the vast majority of those premiums at a cheaper price. So that's exactly what we did here. So we got $157 in premium, but we closed it early for $45. NVDL again, also on the same day, 8/19. So the same day we closed it was, so the expiration for the first one was the 23rd, but we closed it on the same day we opened it because again, it cost us very little to close it on that same day. We didn't think NVIDIA was going to skyrocket like that on that day. But NVDL on that same day, we reopened another position on 8/19 for cash secured put. The exit date would have been 8/23. We closed early. So the premiums paid was 143 times one contract, and the cost to close early was 105. And then Morrow on 821, we did a covered call, and the closing date is 9/20, so that's $21 times two contracts. Again, if Mara gets back up to our break-even price, we're going to close the contracts out and just simply sell the shares because we want to get out of these positions before the end of the bull run, which theoretically is not supposed to happen until sometime next year. But there's the SOM rule and there's all this craziness going on right now, so we just don't want to we don't want to overreach, so to speak. So anyways, in terms of the premiums that we got paid, it was $192 here. So the total for the week, again, it's not a great week, but it's still profitable. So $114.16. But as you guys know, the vast majority of the dividends and all that we get paid is usually right around the end of the month to the start of the month. So this really doesn't come as a surprise. And again, we've been overperforming for weeks on end at this point for a long time. So we're not too worried about a slight underperforming week. Okay, so last thing I want to show you guys here is the native crypto portfolio. So yeah, native crypto shot massively up. I mean, I was actually quite shocked at how fast the recovery in crypto was. As you guys can see here, it is reflected on the portfolio. So went up over $500 in a single day. So that's, I don't know what that exact number is. I think it's like 6%. As you guys can see, the recovery on the native portfolio over the last week has also been quite good. So yeah, a lot of, if not all of these tokens are up massively, which is great. Once again, I do expect the bull run to begin in crypto after the first rate cut. Okay. Can I guarantee it? No, but I suspect with a strong likelihood that that's what's going to happen. So the only position that we bought this week in crypto is Filecoin. We've been slowly adding in because, again, a lot of outlying factors. We didn't know what the Fed was going to say at Jackson Hole, or what the media minutes were going to say, or what the jobs reports are going to look like, or what the markets are going to do, or if the Fed's going to cut rates in September. A lot of unknowns. So we kind of just wanted to DCA in until we get that signal saying, hey, the bull run's on. Then maybe at that point we'll get just a little bit more aggressive. So, okay, you guys can see here we have been buying quite consistently. So on the 19th, basically 2.77 tokens here. 20th, 5.39 tokens. 20th again, 2.69 tokens. 21st, 8.11 tokens. 22nd, 7.63 tokens. 23rd, 9.58 tokens. And again, on the 23rd, which is today, another 2.4 tokens. So the total amount of Filecoin that we have currently is 632 tokens. And, we got some AIOZ and Dash and all this other stuff. So we'll probably add to some of these other positions as well before the end of this year. But we kind of really are planning on just putting the vast majority of money that we have into maybe a handful of positions. We don't want to get too spread out. So anyways, this is our buy, sells, and dividends for the week. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.